Welcome back to the stock portfolio update videos. Currently, my two stock portfolios sit at a combined value of just underneath $102,000. That is made up of the $53,993 in my stake portfolio and then the $47,736 in my Vanguard portfolio. Today I wanted to give a little bit of a weekly update on how my stock portfolios have been trading. Things have been down a little bit in the last day, but things have picked back up with many of the tech stocks in the green back this week, which was good to see for my portfolio. And then even my two ETFs have been pretty stable. Down again today, but again, pretty stable compared to the volatility that we'd seen prior, especially as a lot of people take in this tariff news. This has been a time where I've been investing and putting money into my portfolios. Overall, whilst my stock portfolios have rebounded a bit and I've been putting a lot more money in, I recently invested another $1,000 this week. And then as you can see here, I got around $500 in dividends, which I just did a video on, which I am actually investing. I have an active order here to invest it into VGS. So I think I'll get 4 shares. So just growing my positions while these stocks are cheaper. But yeah, one of the other reasons why my stock portfolio has traded pretty flat, even with this boost again, and with me putting money in, is also the foreign exchange rates. So if anyone might have seen, the AUD's actually been getting a little bit stronger against the USD. It had a point where it really dropped, but it's kind of clawing its way back up. It's now around 64-65 cents. Not as high as it has been previously, such as last September, it was around 70 cents. But hopefully this means with all the instability in the US, at least the AUD can continue to rise against it, which would be quite nice, especially if I'm putting deposits into this portfolio. Again, when the AUD is less, it makes props this portfolio's total equity up, but I'd rather it have a strong AUD, and then my deposits into the account, I get more money pretty much putting in compared to putting in 70 cents compared to putting in, and it's only 62 cents. But many of my holdings have stayed the same. No real changes to report on, just again, sticking to my investment philosophy and investing money now while stocks have been a bit cheaper. So one of my recent buys was VOO. That's probably my last buy I've done in this account. My total position in this is just under 16,000 USD. I'm up around 15%, but that is again because of my dollar cost averaging and then the recent pullback in the market, with an average share price of around $420. If we have a look at the last week, you can see it is down 3%. Again, things did kind of come down. What I was talking about was up here. You could see if we go to the last month, there was a bit of a rally. Things were looking pretty good. And it's kind of cooled off a little bit now, but again, we're nowhere near down where 450 West prices were back in the kind of first half of April. Now we've kind of pulled all the way up into the 480s, which when you think about it, when we were up there in the 520s, it is a bit of a pullback, but slowly getting back to where things were. When I look at some of my individual stock holdings, we can start with Apple, which used to be a much bigger holding of mine, but I did sell out of it a lot before the correction, which isn't too bad, but you can see it's down 16.7% in the last 6 months. I have around $1,027 in equity, or 5.2 shares. Like I said, I've sold a lot of this. This used to be around $4,000 in equity. So I sold a big chunk, and I'm still up around 22% on the stock. It is actually the first stock I ever invested in is Apple. I did a video on my dividends yesterday, and my first dividend also was Apple, so holds a bit of a spot in my heart, but I did kind of trim the position as I couldn't really justify the price. As you can see, the 52-week high was around $260 a share, which is extremely high. It had a lot baked into it at that point, but the PE ratio has dropped to back around 30, which is still a lot higher compared to other big tech companies such as Google, and it might even be on par with Amazon now. But again, it's still been a great holding for me over the last 5 years, up around 178%, and even in the last year, it's still up 19%, so not a bad year for Apple investors. Next is Amazon. Amazon is a stock that I've been growing my position. I was a little bit unfortunate. I started growing it basically before the dip, and I think I remember putting in a big buy order at around 213, and its stock just continued to plummet. It would have been great if I could have been putting that money in now. Still believe in the company, I just don't have as much money on the sidelines as I was allocating that capital then. Where yeah, like I said, now the PE ratio is a lot lower than what it was. It's trading at a much bigger discount just because of the fears of this tariff news. But hopefully that even provides a longer term buying opportunity. As this year goes on, I can grow my position. And again, that's what I have been doing. I'm sitting around $5,700 in equity. I'm down around 12% on Amazon stock now with an average share price of $196. And if we have a look at the last 5 years, this drop kind of reminded me of this time back in 2022, 2023. Even before that as well, Amazon stock was trading pretty steady, and then it had this pullback period. And this was a time where I was kicking myself I didn't actually invest in Amazon stock. And then that's right before, as you can see here, January, right as 23 started, just this big rally. Since then, has just been straight up and to the right, pretty much up until February this year, and then it's just kind of pulled back down. Keep in mind, the price has only really corrected back to this, call it August last year prices. So whilst it is quite a significant dip in terms of percentage, it's not really taking us too far back in terms of a timeline. But yeah, if I do have extra money sitting on the side, Amazon stock is a stock that I'm looking at right now, and I have been investing a lot into. This was only around a $1,000 to $2,000 position. But again, like I said, some of that money from my Apple sale and then some extra money that I just deposited into the account has helped boost this position up. One of the reasons I am quite bullish on Amazon stock is I believe they are one of the best companies, or have the highest likelihood of having real success in integrating AI into their business. There's lots of companies right now that are getting labeled AI businesses, but I think I don't really mind if they're producing, call it chips or semiconductors or whatever the case is. I think Amazon will be on the other side of that, where they're the ones that can really benefit from the increased productivity. When you look at their retail side of the business with their warehouses, I've been reading a lot of stuff where it's quite interesting around the changes that they can make to increase the user satisfaction in terms that can be on their website, or with delivering the packages or organizing them. And then you also look at AWS, which is their cloud business. It's quite amazing the work that they're doing there as well. That's still a very strong growing business. Same with Google, another investment of mine, Google Cloud, similar thing. But I think Amazon will be quite primed going forward. And if the stock continues to fall, I'm going to continue to buy in. And again, keep a 5, 10, 20 year investment horizon ahead of me. I don't see Amazon going anywhere. It's actually got a quite interesting memo from one of their shareholder meetings. There was, I think it was Jeff Bezos said, we're always going to make the decision that's best for the future of the company and the cash flow compared to the accounting standards, where it's like now just doing the best for this quarter's earnings. And that's kind of what you want to hear from your companies that you invest in. They are looking long term. Again, I'm still a young investor. I started investing when I was 18, so I have been investing for getting closer to 5 years now. And it's kind of taught me many lessons of riding these markets and kind of not trying to time the market, but as commonly is always said, time in the market. It's a very common saying, but it is true. Majority of my best gains have just come from being in the market for an extended period of time. It's not come from me being some amazing stock picker or just picking the right timings of markets. It's just been kind of holding long term. The next stocks are Costco. So Costco is a stock that I have held for a very long time as well. You can see it's bounced back very good in this last month. Costco's had a very good month, up around 10% as the stock's kind of rebounded. And even in the last 6 months, 12%. You can see it was previously trading well high in the 1000s, and then it dropped all the way down to the 900s. I was quite sad. I wouldn't have minded if it dropped more, as I really wanted to grow my position again. I did sell out of some of my Costco. I sold around half the position and took a lot of gains. As you can see, I'm up basically 73% on Costco, so it's been a very, very good investment for me. I remember back buying and I was like, oh, the stock at $600 I thought was quite pricey. I mean, you look at the PE ratio, it's crazy. Sometimes it can get hard to justify, but it's got such a good business model. I'm a Costco member myself, even when they're today to put on fuel. It's just a great business. And if I had a bigger position, I'd be quite happy. I think whilst many of my big tech stocks were trading down, Costco was actually helping keep the portfolio afloat, even though it's such a small position. It just gives me a bit of diversification away from the big tech holdings. and it's performed very well over the recent years. Next is Google. Google's another stock that I've been growing my position in, like Amazon recently, sitting at around $5,125 in equity, or 34 shares pretty much, and I'm down around 8% with an average share price of $164. If we have a look at the last month, you can see it's down basically 7%, down 6% in the last week as the stock's really pulled back. It's been a rough time for Alphabet investors. It's now down over the last year, when you can see the stock had traded up previously all the way into over $200 a share. So it's been a really, really quick, fast, big correction. I guess with fears around the lawsuits. They're also facing lawsuits from the DOJ, potentially Google getting split up. The big tech pullback that we had with the tariffs. Yeah, but overall, Alphabet has had a tougher year. I still believe it's a quality company, especially when it's trading at an 18 PE ratio. When you compare it to other big tech stocks, such as Amazon was in the 30s, Apple was in the 30s, Microsoft is still higher. Google's still a quality company growing. Like we mentioned, Google Cloud is still growing. Search is still growing, despite what people might think or say about search going forward. Even in the AI space, Google's Gemini model is still competitive. So it'll be interesting what happens with Google. I'm quite happy with my position. I'm not selling out or anything. Again, if it's at this price and it sits around here, I will continue to buy and grow my position. Same with Amazon. Quality companies, buying them now during this dip, and then hopefully long term, I'll be able to reap the rewards. Again, we've only dropped to around 150. So if you look, that's pretty much April last year type prices. That's why it's so flat, but it has been a good return over the last 5 years at 136% total returns. Next is Microsoft. Microsoft is one of the most original holdings in my portfolio that has had a bit of a rough year, down nearly 8% in the last year, as many other stocks rose. So like Apple, for example, up 19%. I wish I kick myself every day for not selling or trimming my position at least at around 470 when the stock was shooting up here, as I did with other positions. Even in the 430s around here, the stock is trading at a 30 PE ratio pretty much, and I have around $5,000 in equity, or 13.5 shares. I still think Microsoft is a quality company. I'm up 17% still, with an average share price of $314 a share, but it was probably a little bit heavily weighted. It had a very good return for me. I think it was 23. If we look here, you can see here's January 23, and look at this great run it went on all the way, carrying on till January the next year. So this amazing returns here carried my portfolio in 2023 in terms of returns, bouncing back from this 2022 low. This is when I was buying a lot of Microsoft as well. I used 2022. I still have the videos up on my channel of when my stock portfolio was down over 20% in total, and it was quite a rough time. I was still a pretty new investor, and that really taught me the good lesson of dollar cost averaging, buying into quality companies. And because of that work I put in when I was down thousands of dollars in 2022, that allowed my portfolio to really grow and get some really good gains through 23 and 24. If that's the case with 25, where we have another year where stocks sell off like 2022, then I'm just going to do exactly what I did then and dollar cost average into companies I believe in. And then hopefully in the future, because I'm still young and I have a long investment horizon ahead of me, I can really see the long-term reward of kind of my hard work now and giving up the spending now to invest. And then obviously S&P 500, that's just VOO. And this is my biggest position in this portfolio. The goal of mine is to keep it around 50% weighted. We'll go through the Excel spreadsheet a little bit later and kind of show you how it is weighted at the moment. It is probably a bit underweighted. I think it's around 46%, so I do need to grow it. The reason why I keep it around 50% is just because I don't think I'm some amazing investor. And I think over the long term, it is very hard to beat the market. So whilst I get to have a bit of fun and invest 50% of this portfolio into individual stocks, I still try to keep 50% into my S&P 500 low cost ETF, which I think many investors is smart for them to do long term. And it does pay me a decent dividend as well. As I mentioned in my previous video, all dividends are reinvested back into the portfolio, as I believe that's a much smarter thing for me to do at my situation than it is to take the money out and spend it on nonsense. If I can just use the snowball effect to grow this portfolio, I think long term that'll be a much better decision for me. And then hopefully by the end of this year, I can get this stock portfolio specifically up to around $60,000, $65,000 in total. One of the reasons why I'm not being as ambitious with this one is because I am aiming to grow my Vanguard portfolio as well. So my Vanguard portfolio is just sitting under 50,000 now. The goal is to hit 50,000, so around $2,000 away. So yeah, I want to grow this to around a similar size to my stake portfolio. I want to keep them around 50-50 size each. My Vanguard portfolio is a bit more, you'd say, passive. I carry 2 ETFs. VLC, maybe I'm going to sell out of. I did sell $4,000 worth pretty much, or $3,000. And I allocated that money to VGS, as I believe I have better growth opportunities there. But VLC does pay a good dividend. That's what made up a lot of this $500. And I'm just reinvesting that back into VGS. So the goal with this portfolio is to be a bit more, even longer term of an outlook with this Vanguard account, as there's a lot lower fees. I don't have to pay any fees when I'm putting money in because it's all AUD. I don't have to convert anything. No fees when I'm buying stocks, unlike with stake. And then there's a little fee when I'm selling stocks, but I don't sell very much on this account. So yeah, the goal for this specific portfolio is probably to get it to around $60,000 as well before the end of the year. So quite ambitious between the two of them, but if stocks help rally, that's obviously going to help my returns and it's going to help the portfolio value grow. But I'm not really relying on that. So I think just strictly from investing, hopefully it's ambitious, but if I could get both of them to 60,000 or over, that would be a successful time for me, as I am also saving for a house deposit. Next, we can look at the Excel spreadsheet. This is where I kind of show the portfolios. This is what I was talking about when it comes to weighting before. So my American portfolio, so VOO is the big one, sitting at around 46%. Again, the goal is to get that to 50, so it is a bit underweighted at the moment. I will grow that just progressively as things go on. I wouldn't even mind having sold some of my Microsoft shares to put into VOO. I still think Microsoft's a better company long term than the average company in the S&P 500, but I just kind of have this fixation around keeping around 50%. And then my Australian portfolio is split 75 to 25%. Not intentional. Obviously, I want to grow my VGS position more as I trust it more than VLC, but it's split in 3 to 3/4, which is quite nice, just kind of how it's done. Here you can see the stock portfolio values over time, and you can see it's generally just been up and to the right. I really haven't had any real negative months. That's just because of my dollar cost averaging. Obviously, as the portfolio gets bigger and bigger, I'm more affected by market movements because, again, I can deposit $2,000 a month or $3,000, whatever the case is. But if you have a really sharp market fall like we just had, even that's not enough to cover it. As your value of your portfolio grows, you become more and more reliant on the actual returns compared to what you're putting in. But yeah, you can see this kind of keeps me motivated. Sometimes when lots of investors know, it can feel like you're just chucking money into a void, you're just putting money in the side, and you think about the other things you could be doing with that money. But this just shows you over time, things are kind of heading up and to the right. And I am still in the green on both my portfolios. And I believe long term, this will be the right choice for me to make, just to diversify and to build my wealth. And I think it'll be a good idea for me going forward, because in 20, 30 years time, 40 years time, 50 years time when I'm retiring, I hope to still own many shares, as I quite enjoy investing in companies. And it also gives me hopefully a good chance at building some wealth and maybe even living off the passive income one day if my dividends ever get big enough. Maybe my investment strategy changes from growth to dividends or whatever the case being, but hopefully I have enough money in the portfolios to support myself going forward. Speaking of dividends, here you can see them. I just did a video on it yesterday, but I update these at the end of every month. So obviously April hasn't been updated yet, but it will be my biggest dividend ever. And you can kind of see same thing with the portfolio values is the same thing with the dividends, up and to the right consistently, you can see. And the next one will obviously be even higher. But yeah, that's the goal, and then reinvest all my dividends so I get that kind of snowball effect that many investors speak of. The goal for this year is to get over $2,000 in dividends, which I think is very doable, considering if I just keep dollar cost averaging consistently into my portfolios. Overall, that's how these stock portfolios are looking currently. Again, I've had to spend a little bit of money to start this year. That's why they hasn't grown as much, especially with my deposits. But I am kind of getting back into the groove of things, of consistently depositing back into the portfolio. But yeah, when the next paycheck comes in, again, my plan is to deposit another $1,000, and I'm looking at probably just going to be putting it into my Vanguard account and putting it into VGS as I aim to break that $50,000 mark. So that's probably where my next deposit's going to go. If I do put any more money into my stake portfolio, I'll probably be looking at investing some more money into Amazon as it's really dipped, Google, or VOO. Feel free to share how your stock portfolios are doing and what you're doing during this market dip and where you're investing your money. And thank you.